then last note is obviously that everything is self-fulfilling. So the self-fulfilling part being that if I look at this price and I see it go down, like at some point traders are like, okay, well, we've gone down long enough, so now we have to go up. So everyone starts buying again. So it becomes a self-fulfilling prophecy. So those are the kind of three streams of thought of why TA should work. And that's kind of where I kind of want to have that realization with you that it's not like set in stone why this would work. So if we have these patterns, like why would we then how would we look at these? Because we know we have this one wave, but how do we distinguish that? And what is a group of waves? So if we have this first wave, and then this second wave, and then this third wave, like what does that mean? Like how do we distinguish that? So in the most kind of traditional way of looking at charts, so this is going back to like the first people that started charting, is to kind of just look at, and this starts on the very high time frames. I'm on the weekly right now, just to give everyone kind of an idea of why it matters to be on the weekly, right? Because if you are trading here and you're looking, oh, this is a green candle, like if you're on the 1 minute chart right now, so this is the 1 minute chart, right? And you're like, oh, this is like going down and then it's going to go up, and like you have no idea of context, because in TA, context is the most powerful thing. You need to know what the trend is. Finding trend is kind of your key to knowing what your odds are, because again, this is about knowing the odds of something happening or not. So if we go away from the 5 minute or 1 minute chart, like even 1 minute to 5 minute chart is a completely different story already. Like if you at the 1 minute chart, we're like, okay, we're going down, like we're going down. The 5 minute chart, you're like, oh, well, we've been going up, and see that might correct and we can go up again. But we start off like on the very high time frames, because I'm going to go back to the perpetuals. Makes more sense to do that. It's easier. So that's why I kind of start at the higher time frames. You don't have to start weekly. You can start daily as well, but it'll show basically the same chart if I zoom out, right? It's still the same thing. You kind of need to know context. So from our all-time high currently, we've just basically just been going down. We've had one little relief rally here, and then we kept on going down. So the context and the trend of this entire move is down. So if you're betting that everything is going to go up, no matter kind of what the time frame is, you're kind of lowering your odds already, right? As long as the trend is down, it's very much lower chance that you'll make money doing bets that we're going to go up. And this is obviously depends on time frame. Like obviously this is the daily, so this takes a lot of time to kind of get through. So in between these time frames, especially if you go to the weekly, in between these candles, these single candles, it's 1 week at a time. So this is a week, this is a week, a week, a week. So yes, you could make money in a week. So a lot of people here are obviously trading short term. But if you're buying spots, or you're buying a bunch of Bitcoin or a bunch of AVAX and you're holding it in your wallet, then if you're looking at the 5 minute chart and you're like, okay, this is a good time to buy, while the general kind of trend is down, you're probably not going to make any money off it real soon. So that's kind of the thing you need to always consider when looking at these things, like start up high, figure out what is the trend. So and one easy way to do that, this is kind of the most fundamental or easy way to do it, is to kind of get let me just turn on the lock. You kind of get one of these, like the parallel lines. I can extend these to go right. And then you can see that we've basically been in a channel for all this time. And we've almost hit the bottom here again. Now it's looking like it might wants to go hit up channel, which is around 36, 37K. Looks like it. We don't know if it's going to happen, but this is basically where we're at right now. Since November 2021, we've been in this channel. And this, I can pick the bigger channel as well, but we have to like go and do this one. And this one we broke. So if we go and look at this channel, so that was this one. This is what broke. So we broke our original channel going up, and we broke down. It's good to have these references, then you know where the price is likely to move. So right now we're in here. It's a good idea to kind of just have this available on your kind of timeline. Go on to the weekly, like do the parallel box or the parallel lines, and you have an idea of where price will likely go. So if you see the price is like near the bottom of this, it'll very likely be the bottom of it all. So, and that's good because that's everything like everyone's saying already, like 22, 23K is a point of interest. And like in reverse, the 37K needs to be broken. We need to break out of this channel again to kind of confirm that we're going up. So everything in between is just no man's land in this case. Like it's very hard to like make a bet right now if you want to go spot long. If you want to buy like 20 Bitcoin right now, this is a bad time to buy it, right? You kind of just wait till you get confirmation that we've either hit a bottom here, so we go up, or that we're breaking this channel here on top. And that's kind of the fundamental of channeling. And this is the oldest way of kind of learning how to like read a chart. And this works down. So if I go to the daily now, so this was the weekly time frame. So if I start drawing lines, you're going to see that I can draw a line from here to here as well. And that'll kind of, you have to kind of get that angle in there. So you can see that we can make angles that will channel in there. And obviously I didn't do it properly here, but you get the idea of kind of knowing where price might go. And this was definitely a straight one down. So we'll follow that channel. Looking at the top, then you realize, okay, well, so we made one wave here because it never broke above. And then at some point it broke above and it started going here, which basically means you've broken the wave set. You've gone into a new wave set. That's kind of the next chapter I want to go into, like wave sets. What is a wave set? A wave set would be something that stays within the channel. As long as you're in that channel of that initial wave, you can kind of expect it to follow that channel along. The moment it breaks out of it is the moment you kind of get to the chance to go up again. But like going back in time, obviously, when you were here, you did not know that this was the top here. So we could not have drawn this channel yet. We can draw it now. But as you're in waves, you can actually kind of do this on any kind of time frame. So if we go to the 1 hour, you see where we're at in 1 hour in our kind of bigger channeling. But we could have drawn channels here as well. So because this looks like channels. And what I'm doing is here, I'm hitting all the wicks, like all the wicks from that kind of wave. I'm putting down there. So as you can see, that's another kind of channel we were in, which we broke. Which we didn't break, but we're about to break it probably. If this breaks, then we'll have a good chance we'll see the top of this channel because there's nothing really in between. So it's kind of nice to kind of see where price keeps stopping because that, for some reason, follows a line. And every time that line gets hit is when we can expect it to either go through or not, but more likely than not, it will actually always fail because it's always going to be a point of resistance, a point of resistance or support. If you draw the channeling under, which I can do, I think here, that'll actually kind of hit. So I don't have everything right. I have to go into the lower time frames, but you see this kind of hit from there. We followed it down, and then you got here, and then start moving back to the other part because it hit below, hit the bottom one. It's kind of nice to kind of see why these channels are here. I'm not going to go in depth what the theory is behind the shapes of the channels. Like you can figure that out after this. But the shapes of channels do matter in kind of the context of what a wave supposedly will do. But just having the ability to kind of go and look at these channels is kind of very powerful in itself. Let's see. Any questions so far? Because I'm going really quickly, I feel. So, any questions? Not? Okay. Well, that was easy.
I guess nobody has questions.
Oh, that's perfect. So I'm just going to clear this up a bit to kind of get some room for other things. But let's see, like kind of
I
having
do have a
channeling.
question.
Sure, go ahead.
How long have you been trading?
Trading I've done for a year, or like active trading for like a year or 2 or 3, but I've done the kind of like technical analysis for, started doing that like 10 years ago. So it's was part of my job back then to kind of do technical analysis on stocks as well. That's kind of where this came from. Yeah, does that answer your question?
Yes, I was just wondering.
Yeah. No, active trading for myself, I hadn't started till later because I was like initially not really interested. And then crypto made it kind of easy as well. So I was like, well, why not? Right. Any other questions? Why such good English? Is that a question?
Is that Zeal asking that?
I think Skelly's asking that.
On behalf of Zeal?
Sorry?
On behalf of Zeal? Oh, I think he
Maybe.
went to bed. Okay.
I don't know.
He's in Thailand. He's opposite of us on everything.
I was just being silly. It wasn't a real question.
Yeah, okay. Good to know. Right. No other questions then? So, an interesting thing to kind of then look at is what traders use as tools to kind of make this easier. Because if you're looking at this and you're like, like where do I start my channel? Like how do I know where I'm at? So a lot of these kind of traders use moving averages. So that's the first one I'm going to kind of show. And you'll realize then kind of why these channels matter all of a sudden. So if we go to this, I'm on the 12-hour now. That's kind of a weird time to be on. But look at the kind of channel I drew here and look at the moving average. They follow each other. And this is the 50 EMA on the daily. And you look at the 200 EMA and look how that follows that channel. And like I didn't look at the EMAs beforehand to kind of figure that out. I just drew a channel. And for some reason, the traders either follow these EMAs a lot, or they're kind of, the algorithms work that way, or we're all kind of connected in one holy oneness and we're all making the same decisions. So these channels and these moving averages, they start lining up real quickly. You'll see points where the moving averages will actually show exactly where the channel will be going, and especially if you go down in time frames, you'll see that like we had a channel here, we hit it. It's the same points we hit that, in this case, the 800 EMA on the hourly. And then you see here, we've hit that 800 EMA on the hourly and it went down. And we're hitting the 800 EMA on the hourly again. If it doesn't break, we're going to go down again. So that's kind of where, like when I just made the call in the trading chat saying like time to short, that's where that initial idea came from. Because I kind of knew what the kind of movements are, where we are within the channel. We haven't hit the bottom actually yet, and if you look historically, the 800 EMA on the 1 hour, which is that's the 200 EMA on the 4 hour, because it all works based on the amount of candles you're averaging over. So if you have four times more hours, like four times more time, you'll have like the averages will kind of shift. So when you look at that and you look at kind of historically what's happened, so since we started going down, we haven't been able to kind of get over the 800 EMA. That's just been the barrier to kind of go through. We've gone through here and we've failed, and then we dipped below it again and it hasn't gone back up since. And if we look at that on the daily, which is, so the EMA shift again. So it's, I think the 50 EMA on this one. Look at, yeah, it's the 50 EMA. So the 50 EMA here is the blue line on the daily. Once we started breaking down below that, it has gone down, sideways, hit it, goes down again, goes up, hit it, goes down again. And then at some point we started breaking through. then the next EMAs became an issue. So that's all these kind of resistance points we've hit so far, and we haven't actually broken any yet. So we haven't broken them up yet. So there's no uptrend. So it broke down again, and that's what I just was showing you on the 1 hour. We haven't been able to get through that. So the expected trend is just down. Like that's just where we go, and it might go up for a short bit. So like you see where the 50 EMA on this one is currently. It's at 33K. Might just pop up, hit it, and then just shoot down again, because that's the most likely scenario here. So again, using TA to get the highest odds of something happening. And as we look at the historical part where we've been hitting that EMA for all this time, the odds are that if we hit it again, we're going to go down again. Any questions regarding that? I see Damon typing. Oh, where is Zeal? I don't know. I think he's asleep, maybe. It might be late for him. I'll have to give Zeal a little private update, like a private thingy on this, I guess.
I didn't hear like the last 5 minutes. Do you use Elliott waves?
Yes, I do.
Okay.
Why?
Because I asked J3 if he used them last night, and he said he didn't. So I was just wondering.
Right. So I can go, because like I've just covered a lot of things already. I wanted to go like and look at one more indicator, just as kind of an idea of why these things work and why they don't work, or how these are being used. Because we've now been looking at EMAs, which are very common, and then you have the kind of indicators, which are basically a combination of things that are just presented in a very kind of singular way. I was going to look at the RSI, which is the relative strength index. Ooh, I'm going to turn that off. I don't like that line. Stop. Don't care for that. So the RSI is a kind of useful tool. Basically what it does is it looks at price movement and the amount of kind of volume involved with it over time. So volume is another one of those kind of things where you see this, all these colored bars at the bottom. That's volume, and volume kind of shows you how much people kind of, and how much money has been transacted and how much activity there was during that time that this happened. So see this big blob down, that was during a high volume moment. So people were actually actively highly selling off at that point. So on the relative strength index kind of just maps that out over time and gives you an indication if like strength of any movement is weakening or strengthening. And what you kind of do with that is to look at, okay, where's price moving and how is strength moving? And it's just a nice one to see, because it'll help you understand basically all the other indicators that you might come across, because they're all kind of based around these pillars of kind of data that are available. So basically you have price data, which are the candles, and you have volume data. Those are the most common data types available for charting. So having like a tool like the RSI, which is down here, really helps to kind of figure out, okay, well, so how much people are actually still selling this versus how much people are or is it like weakening? So is there a chance of a reversal? So if we look at, in this case, because we've been going down, you would look at lows. So this low, for example, if you look at the strength down here, it went very deep. This low has not gone as deep. So you could say, if you draw a line here, definitely not have that. So draw a line here, this is going up, while this is going down. So this will probably, like, this is on the daily, so that's a very high time frame, which is less useful. So the hourly will always be the most important way of kind of looking at this. A good example just happened where we went down in this little move. This was on June 1st. This was the down on June 1st. And you see this kind of aggressive move down, and you see that in the RSI, there was an aggressive move down. And then we had another low, but not enough, not the same strength. So you see that this is going lower. It's just slightly lower. Doesn't matter that it's not as much, because it's also a lot weaker. So then you can kind of estimate, well, okay, so if the pressure downwards is weakening, then assume we're here. We don't have this right side data yet. I could replay it, I think, but actually do that. Just click here. Yeah. So say we're here. This was June 3rd. We see this, we see the strength leaving, even though this will make a lower low. So yeah, we made a lower low here, but strength didn't go as low. So we know that going down, the downwards price action is weakening. So if you then read that as, okay, well, there's a good chance of this reversing. And then if you make a bet, you can see, I'm just gonna turn the speed. This has worked. Let's make that a little faster. That's where we are now. So just because of that little kind of strength indication, we realized, because this one we call this divergence. So the price goes down while the strength goes, how do you say that properly? While the strength in one direction weakens or strengthens. I don't know how to say that. Basically, upwards pressure strengthens, I guess. So you could read it as that. But basically, if the line is facing the opposite direction of the price movement, you can assume that there's going to be less pressure in that direction over time or in the near future. This is kind of a nice way to look at things, and it's a nice indicator to have. It's the most basic indicator to kind of read through looking at when to kind of trade as well. Because if you're looking at people say, don't catch a falling knife, for example, right? So if you look at this movement, this big movement that we had, you'll start seeing, okay, so here we go down, and a lot of people would just then make a bet saying, okay, well, maybe we'll go up now again. But if you actually just wait for the RSI to print one of these, especially if it's later, you kind of need to have patience for that. One of these, and then you wait for it to print another one of these, and you kind of see where the trajectory is going. So if I initially see this, which might not be enough to kind of warrant it, even though, because the price action was very aggressive. But then this this movement, so from here to here, was a lot weaker. So realizing that, you can put your bets on kind of reversing around those strong discrepancies in strength. So yeah, that was just the RSI I wanted to show. It's one of the kind of fundamental things to learn as you do this. You'll find a bunch more indicators that will tell you similar things or have things added. So I'm gonna show you one as an example. So the MACD is a very common one used. So, and this uses the moving averages to kind of see where divergence might also be. So in this case, the divergence that we had here does show up here as well. So the MACD, you can use another tool to confirm all these things. So they just show you the movement in strength and the movement in the average, history average, and when they kind of converge again. That's a good one to have as well. But all these tools, these are the basic fundamental tools that any trader at any point learning TA will learn, because everything else, all the kind of script you can download, they're all based on these principles. And so TA is all based on these principles. And then as a final chapter, I had advanced TA. So I'll kind of do the advanced TA in two parts, because you asked about Elliott wave. So I'm going to just do first a non-Elliott wave one, because it's more in line with kind of knowing these fundamentals. So if we add Ichimoku Cloud, which is a very popular one. I'll actually remove all these things. So Ichimoku Cloud adds a bunch of different things. So you see this cloud, which is, I put the hourly, I guess, up. you see this cloud, and the cloud is basically a combination of moving averages that you kind of can read to easily distinguish between, okay, where are we going, what's the trend. So if it's a green cloud, we're in an uptrend. If it's like a red cloud, we're in a downtrend. And so you can do this on the daily as well. Obviously, we're in a very big downtrend for a while now. So you see from here, we've been in a downtrend. We had a small uptrend, but it actually never became a full, like it became this wonky green cloud. And then we continued the downtrend. So this is a very useful one because also Ichimoku trading, if you're using it to trade, basically has 4 rules. I could probably look them up to kind of get a better, otherwise I'd have to try and explain it. Ichimoku 4 rules. Does that work? Let's see. I'm gonna put that in here. This is all coming. Anyway, you can also look up the rules. It's just something that the rules are very simple. It basically gives you 4 rules on when to buy, and like so, some of these rules would be if the price moves above this cloud, if it shoots through this cloud and closes above it, and this green line, which is the lagging span line, is also above price, and the cloud is red. That could be like a rule set for Ichimoku. If those things are right, you buy. Depending on the time frame, of course, but those signals are very easy to kind of grasp. So that's what it basically allows to make your trading life much easier. But in essence, these are just moving averages. The entire thing is just a moving average. So it's kind of a really interesting thing to look at things, and it's basically a simplified way of figuring out when to trade and when not to trade. Because if one of those rules is not there, you don't trade at all. Like that's it. You just don't trade it. You don't take the risk. And then if you do get all these things aligned, then you can trade and put your stop loss right under the cloud. So say it breaks through here, you put your stop loss right there. So if it does fill, if it doesn't come true, like that's the only kind of like margin you're losing, right? It's only this. So that's part of the rule set. Makes life easier, makes trading easier. I personally have used it quite successfully. If you follow the rules, you will end up with a net profit over time. Like you're not going to hit every trade. Obviously, there's no way to get every trade to go your way. But in essence, like in general, this is a very high odds trading strategy. It doesn't have as much to do with TA other than it shows you very easily where the trend is. Like if it's red, we're going down. Like that's where we're going. And so that's kind of the nice thing to consider. Like if you really need an easy way to identify trends, the Ichimoku cloud is a very easy way to do it. More complicated things around TA, and that's where you came from with Elliott Wave, is to kind of figure out, okay, started this talking about wave sets. And in Elliott Wave, you basically recognize that wave sets come in sets of 5, basically. So, and that's why, funnily enough, you have these nice 1 to 5 things. So what Elliott Wave basically says is that you can identify all these waves, and it becomes very subjective unless you're really good at it, in like patterns. So you get like 1, 2, 3, 4, 5, for example. I'm not probably doing this right, but you can kind of see where I'm going. This is like the one wave, it goes up, it goes down again, goes up again, goes down again. That's the basic principle. And maybe this is not the best wave to do it on as an example. We can find a better one to do it on. I think I can do it on the larger time frame stuff. Maybe I should do it on AVAX for fun of it. AVAX. Because I know you guys are all trading AVAX. I'm going to remove some of these things.
Or Phantom.
Or Phantom?
Only down.
Only down. No, Phantom is almost done. It's better off currently than AVAX, I feel.
Yeah, it is.
Well, so this is the hard thing. Like, these waves are more complicated waves. So I don't want to go into Elliott wave too much, but in essence, what Elliott wave always says is like, you have waves and they start all looking like this. If you can identify this wave, great. So you found one wave. Then within each wave, there's another, like every one wave, you have another one of these. So they're actually fractals. So you can find these patterns on any time frame, from like the longest time frames to like the shortest time frames. You're going to find these patterns. So what that would look like is if I go and seed wave 1 here, I could like subdivide this into just a smaller one. This is something like that. So I could subdivide it into 1, 2, 3, 4, 5. And then for every 2 and every 4 wave, these are corrective waves. So you would kind of go and do, they would be classified as ABCs. What you would do is then go A, B, C. To make it tidy it up a bit. That's kind of how those waves look like. And if you kind of look like that, so we went up here, and what do we see? A, B, C. And then this becomes more complicated because you could also say, well, that looks like an ABC, but this also looks like an ABC. Go down, B, C. And that's where kind of Elliott wave becomes very complicated. Like, how do I subdivide what? And looking at this, from the Elliott wave, I know this probably would be classified as a WXY, which is much more complicated to explain. But what Elliott wave allows you to do is, especially on spot trading. So if you're like just want to buy 20 Bitcoin all at once, or you want to DCA at a good point, Elliott wave will kind of help you forecast that, because it's very accurate in kind of forecasting where price might go given a certain context. And the difficult thing about Elliott wave is that the context is subjective. It is the person who's reading this context that might decide he sees something, or might determine that this is the truth. And so a lot of Elliott wave on Twitter is really, really, really bad. Like, most of it is kind of unusable. Like, they're making all these weird assumptions. But if you're learning Elliott wave, you also learn that there are rules. So certain things cannot happen. So for example, one wave, let's grab the larger one wave. That will be a subdivision of 5. But then the second wave can never go below the first one, like where it started. Because if it does that, then the context breaks. So there's rules that you follow, and if all the rules kind of match up, you'll probably get a very good indication of where things will go. And that's part of what helps me predict where the market's going as well. So if you look at my personal version of this, it's a really big mess at the moment. So I haven't done the entire chart. I do have it on another chart. I have done the Elliott wave from Bitcoin since it began, but it's on another account. But you'll see that I have this charted out, and you see also I'm using the Fibonacci's to check my work. I check whether it falls within the rules of Elliott wave, because if you know the rules, you can kind of guesstimate where we are. So in this case, let's delete that for now. You can see I also drew these channels, but I also have the count for the current wave we're in. And the current wave we're in tells me that we've got a 1, we got a 2, we got a 3, we got a 4, so we still need a 5. And so that gives me the best indication for me currently that we're still supposed to go down. And then we'll see. That's my highest odd version of this. There's a version where I can count this as 1, 2, and we're about to go make a 3 to the moon. I can make that argument, and that count will probably work as well. I just don't consider it as high odds currently, given the fact that we're in this channel and we have not broken this at any point yet. So my highest odds trades are going down. Like, if and I work by the rules that I don't even trade against the trend. If the trend is down, it is too risky to do it, especially if you're doing larger numbers on larger time frames. You're scalping on the 1, 2, 5, or 15-minute time frames. Ignore that completely. Like, be my guest. Like, if you can snipe a couple bucks off of that, that's perfect. But if you're doing day trading, you need to be aware of trend, and that's currently the trend we're in. So it doesn't, like, if you want to get, you woke up this morning and saw, well, or last night, basically, and you saw, okay, well, we're going to do this right now. We're going to go and finish this 4-wave. Then yes, you could have entered a trade here and like gotten up to here, and that's a really good trade. That's a good day trade. But then you always have to kind of keep in mind that the highest odds are down. We should finish this for sure. So that's it on kind of Elliott wave and the kind of more advanced things. Any questions? Because I've gone through a lot of things at the moment, and I think we're rounding off at an hour, which is kind of nice.
Can you show more of the fib thing off?
Sorry, the what? The what?
The Fibonacci thing?
Oh yeah, sure. Well, Fibonacci is like a difficult thing depending on what way of TA you're using, right? So if you are using Elliott wave, then you kind of realize that, say for example, I have to find a wave that actually matches that. So let me see. I think we can do this one. So basically this is, can I do that? I'm gonna try and do that. So Fibonacci basically says, so this is, to me, is a 1 wave. So this one was a 1 wave. It's after the 1 wave of a different wave set, but this is a 1 wave. And so I know from the rules of Elliott wave that the wave 2 after that will reach to about 0.618 or 61.8% of Fibonacci. So we look at that, and at this kind of Fibonacci, we see that was actually kind of the end of the wave. And then it started going up as predicted, because wave 3 was going to start, which is always the most impulsive wave. But we got COVID in between, so we got the scare. So this was a sell-off, news reaction, but because of the nature of Elliott wave, if you believe in that, news is irrelevant to any of this. The true Elliott wave believers think that news will never affect any of this. Everything is part of the cycles of Elliott wave. So if you're looking an Elliott wave believer and you're looking at this, you're like, so that's why that holds true, because we had the massive sell-off kind of going into there, and then we started going up immediately. It instantly covered, and we had the wave 3, right? So the wave 3, we then kind of go back. Wave 3 is followed by a wave 4. Wave 4 should kind of always end up between certain fibs of where we are. So currently, am I doing this right? Normally, a wave 4 would actually kind of go and hit this one. But because of the way it kind of overshot on the first, so this was with the A, B, C, it overshot it. It always leads to a very deep correction, like usually to 0.5 or 0.618, which is around where we are now. So looking at Elliott wave, I would say we're almost done. We'll probably have the final wave down, the 5 down, and that'll be around 23 to 24-ish K. And then we should be done with this. That's kind of what Elliott wave says. So using the fibs really helps to kind of figure that out. And you can also kind of do it on waves that are not there yet. So if we consider this a 1 wave, like we just did, and we get the Fibonacci extension tool. So I'm gonna have to kind of figure out where I need to draw this, because because of COVID, it could have kind of gone under. Also, I need to have this be on. That's perfect. So Elliott wave tells you that the wave 3 will kind of be will kind of extend to 1.618 or 161.8%. And it like literally just hit it. Like what I drew here is the extension. So I kind of went from the bottom of the wave to its top. So that's wave 1. And then we went to the supposed bottom of wave 2 because I'm ignoring COVID for now because I'm thinking an Elliott wave. So right at the bottom of wave 2 of what I've identified as wave 2. And then you kind of go and see, okay, wave 3 should hit this 1618, which it just did. Like it's right there. So that's kind of nice. Like this is obviously not premeditated, but that's how Elliott wave works. Like it uses the Fibonacci's to get targets and kind of make you, gives you an indication of where bottoms might be as well. For some reason, Fibonacci is also involved in this weird, like it's the golden ratio. I don't know why. I don't think we've figured out if this is a global consciousness thing or not. But it's very, very interesting because, again, I'm not making this chart up. Like this is actually what happened. If you look at the Elliott wave rules, that's exactly what they state. If you have a wave 1, you have a wave 2, and you get the extension of it, you kind of see where the top is of it. And this was obviously not completely accurate because of COVID, but they tend to be very accurate. It would always be kind of multiples. It could have realistically probably hit there as well, but we didn't, and that could be because of external factors. But then you realize we're still in that wave 4, which also still follows the rules of Elliott wave. So it's a very complicated discussion, but that's kind of how you use Fibonacci, at least from this perspective. It's used for targets, and different methodologies or different forms of TA will use it slightly differently, but they all kind of revolve around the golden ratio in the end.
So you always started at the beginning of the first wave?
Or for calculating the third wave, yes. But if I want to calculate the 5th wave, you have to do something else. Like you have to start somewhere else. Because there's several ways to start doing that. Like you can start it from the start of wave 3, and there's different fibs associated with that. You can start it from wave 1, and then kind of figure out where it should be. But that's a harder one to do. Again, if you want to learn Elliott wave, and it'll take you some time. It's a lot of reading. It's a lot of learning rules. But it's one of those methods that for some reason tends to show up every single time in a chart. Like almost never have I come up to something in a chart where I'm like, this cannot be explained by Elliott wave, or it broke any of the rules. It's just that way. So again, if you look, this is the index chart. Now it's harder to do on this. Let me do it on, say, AVEX. I don't know if this is the entire AVEX chart though. I'm assuming so. Yeah. So the harder thing is, if you're using Elliott wave, is that if you have a young project, it has not actually boomed yet, which is kind of weird to say because obviously AVEX has mooned in comparison to something, but you don't have a lot of kind of wave sets yet, right? You can kind of identify this first thing, drupal down, and then you get this move. You get a move here, and then you get this final move. So you could assume that you could think this is a wave 1, but it's not enough data. But we can just check with fibs to see kind of where things come from. So if we assume this is a wave 1, then a wave 2 can go very deep, which would kind of make sense in this context. It can go up to 0.9. So I need to do this, yes. And so this would have been a wave 2, and then you have a wave 3, and this would be all wave 4. But looking at this chart, I might be mistaken because I just don't have enough data. So it could be something else completely. And that's where context matters, which is really hard to kind of gauge, especially on younger coins. Once like you have a full bull cycle in a coin, you can actually do this. Before then, it is very much just looking at the other kind of factors, because it's gone really deep right now compared to where it came from. And then FTM. So FTM I did do this for. 1, 2, 3, 4, 5. For some reason, FTM is much easier to chart. And if you then use the fibs here, you kind of get the confirmations again. Fibs. So this one went pretty deep, 0.786. And then if you want to do the extension, where are we at? The extension, right? Nah, I probably have to use the fibs one, or the normal ones. So this really mooned, like this really mooned. That's kind of what you take out of this. So this went beyond the 1618 by a lot. But then this one, the wave 4 will fall into line again, which is kind of funny. So the wave 4 should be that doesn't hit the 0.382, which is also in the rules. That's where wave 4 should be. So you kind of go and read charts like that using added wave, and the fibs always help you to kind of confirm. And yes, fib retracements are much more useful. The fib extension tool is just kind of a ballpark for a lot of things.
So it's kind of like a self-fulfilling prophecy because so many people are using it.
Oh yes, I guess so. But like going from this, I learned this 10 years ago, and like through the years, I kind of figured out that a lot of people don't actually know what they're kind of doing. They don't know the actual rules, and then kind of Elliott wave falls apart. And then you have a lot of people saying, well, then there's also like this subjective aspect to Elliott wave, which is also entirely true. Like I can read this as 1, 2, 3, 4, 5. I'll say, well, no, this is an A, B, and we have a C after. Obviously, that's never going to be the right context in this setting, but an A wave has 5 waves as well. So if you don't know that there's nothing before here, you're looking at this on any chart, not FTM, just random chart. You're looking at this, and you think that, okay, well, price is going down. What we see from here, it's going to be an A, B, C on the way down, and then you continue another wave. So there's a lot of subjectivity. There's a lot of 5 waves, a lot of 3 waves that you kind of have to learn to distinguish. And Fibonacci helps because it gives you the targets and it helps you identify which wave it actually is. So I hope, I think Elliott wave is one of the really most difficult ways of TA you can probably learn at any point. And it's also the least useful one for trading. It is the most useful one for holding. So if you want to get good at holding, then Elliott wave is kind of incredibly useful because you can recognize bottoms like anything. But if you try and use it on trading, so if I'm going to go into this one and go to the 5-minute time frame, I don't know what you're trading on there, but I get a headache just trading like these kind of time frames anyway. But like you'll find these patterns here as well, right? So let me see where we come from. It's the 5-minute. So you have a 1, 2, 3, and then we get something weaker, and we should expect like little 5, basically. That would be within the realm of expectations after like looking at this. Not the most clear example, because it could also be another set wave, because I haven't actually done this. This one is more clear, right? So this is a very clear one. So this would be 1, 2, 3, 4, 5, and then you get an A, B, C, A, B, C. That's one of those patterns. This is on the 5-minute chart. This is headache. You don't really want to be doing this. This is completely mental. Try and do this. I'm just trying to give you an indication that these things show up everywhere, and learning how to kind of read this and identify it, that takes practice, takes time, and is extremely subjective. And you'll have endless discussions of people that know Elliott wave that between them to kind of figure out which one is the right context or has the highest odds, because like everyone reads a chart slightly differently. But I do think if you're very good at following Elliott wave rules, like you'll be really kind of good at figuring out where the context lies. And it just does work a lot better on the very high time frames, on the daily, on the like up to the hourly, it works fine. Anything below the hourly and it becomes a headache, but I hope that answers it. I feel like I'm rambling. I feel like Quicks all of a sudden.
I was just going to say that you're making my head hurt like Quicks does whenever he does an AMA.
Sorry.
I'm like, okay, so I thought I had, I'm a beginner. I understand that, and I thought I was getting a grasp on it. And he started talking about all these different theories, and I'm like, well, I don't know shit. So I'm gonna be spending a lot more hours on Google.
Well, so again, it depends on what you want to do. If you want to like scalp, like you don't need to learn Elliott Wave at all, right? I feel like if you want to like fill your bags with coins and realizing when to buy, then Elliott Wave becomes really useful. Like you just look at the daily and the weekly, and then go down to the hourly, and that's where you kind of get your information from. For trading, like there's easier ways to trade, right? Like I showed Ichimoku because it's a very kind of intuitive, uses all these fundamentals I've explained, and you kind of can get a grasp on what's going on pretty quickly, which is kind of nice. And I agree with the
name of that. I'm gonna get the name of that. I'm gonna try to get the name of that theory from you, and I'm gonna Google it too, because that one's kind of interesting. I've seen it around quite a bit, but I can barely pronounce the damn thing.
Oh, no one can. I think like I was on another server and they called it Ichimumu. So like Ichimumu. I don't know. People have struggling with it, but Ichimoku is. Let me see. I can have it.
It's now officially Ichimumu. Ichimumu.
Ichimoku. There we go. Yeah, it's like it's very easy way to kind of get the hang of things, especially if you're kind of want to learn the kind of fundamentals. I was showing it on screen, but Ichimoku. There you go. And I agree with J3 that all of this stuff is subjective, because again, I started this off saying like TA is some kind of belief. Actually, it's like you have to believe that the history affects the future. So like that's the first subjective thing about it, and the rest becomes even more subjective at that point.
For sure. And like I was telling J3 before too, like when it comes to the TA stuff, what I tend to do, because like I don't completely understand it, but I take a bunch of people that I know, like equal amounts, like some of my favorite bears, like Atma, if you're in here. Mm-hmm. And then I'll find my favorite bulls, and then I'll find a couple of TA guys that are kind of that are like hybrids, and then I kind of just draw a line in the middle and kind of go from there.
Yeah, that's probably a good way to go. And alternatively, obviously, like I would also recommend getting some fundamental analysis skills under your belt. Like there's a reason like Warren Buffett became as rich as he is and successful in trading and investing. Again, that's his he's not actually trading, he's investing, right? And there will be some kind of trade-like things in there, but all this stuff is based on fundamentals. And fundamentals are arguably more valuable than technical analysis, because if you have good fundamentals in some way on something, there's a good chance you're going to make money off it. So you look at a project, and then you kind of look at the team, you look at their kind of finances, their kind of goals, their business plans. You just scour through those, and then you realize, okay, well, these people have a really good idea and a really good solid team to kind of work that out. Then it's a good time to invest. And like you see that if you are not in DeFi, so all these kind of bigger projects, these blue chips, those are kind of good to look at for fundamentals, because if you read them and you're like, okay, well, that's impressive, they're kind of changing the world, they're doing something new, and that's gonna have such an impact on this industry, then you can go about and say, well, that's where I want to invest in. But like a lot of people in DeFi kind of lost that, or have never learned that ability. So they just go and like they look at this Twitter, and there's this guy who's basically a glorified car salesman telling you that you should invest in them. And like that's the dangerous part about it, right? Like there's no research from your end. Like you're not doing fundamental analysis.
Yeah, exactly.
You just believe this Schiller or this influencer or like this guy who has this charming profile picture to kind of go and put your money in there, and like that's how a lot of people lose a lot of money in this space as well, which is kind of sad.
Yeah, but when I got into crypto, maybe I think it's only been like 5 months or whatever. I thought reflection tokens were the next best thing, and then I soon found out that it's just a bunch of people that want you to hold while they use you as exit liquidity.
Yep.
So, and then they promise you like, oh, well, they're selling, so you're getting a portion of the 10% tax that they're selling, that they're getting taxed selling their large amounts. It's like, yeah, but there's 10,000, 50,000 people holding, so
Right.
breaks down to next to nothing. So
basically, yeah. And that's the thing. Like, I think like learning what DeFi is, learning what crypto is, and learning actually about the technology and why some things are important, some things are not, and realizing also the history of kind of finance, not only like in crypto but in general, like the history of finance and why Bernie Madoff went to prison, for example. You'll start realizing that a lot of current DeFi things are not what they say they are, right? It's if someone's offering you $1 million APY, like, where does that money come from? If there's no answer to that, then it is something you lose your money on eventually. So that's always something to consider, right? And I will, like, this is obviously a TA workshop, so if you guys are interested, I can do a more in-depth like forecasting workshop as well, where I can take you through my thought process of how I'm analyzing certain projects and how I'm kind of going about seeing what's worthwhile.
I got like 3 that I can hand out to you right now, but I don't want to much of them.
Sorry, what?
I got like 3 projects right now that I can mention.
Yeah, no, I know you have messaged me, and Damon has messaged me like with projects and asking me like what my thoughts were. But like, I think it's a very good skill to learn to do this yourself, because obviously I'm not going to be around to do it forever for all of you. And like, I will shout out about like obviously projects that I see the red flags, but it is very useful skill to develop if you're an investor. Like, and that's why what I kind of said in chat, I think a few days ago, saying like investing, it's a job, right? You have to learn how to do this job. And a big part of this job is learning to see what something is about and having like being able to kind of dissect what it is they're selling you. Because like you don't go and give money to the first person that comes to your door, has a pretty face, and has a smooth talk, and just like, you don't always give them your money. You shouldn't. You kind of ask them. Why? Well, that's the problem. Like, why should you? Like, that's the other part of it. Like, what has he done that to prove that that's going to be a worthwhile kind of thing for your money?
Yeah, exactly.
It's a weird situation. I feel that this current state of DeFi, and that's why kind of fundamental analysis should also be on the list of things to learn. And it's very hard. Like, you can go to college for that and get a degree in it, because like that's it's that big of a subject. So, but you got to start somewhere, right? And learning how to kind of read like finances and money flows and those things, useful. Learning how to kind of research a team, useful. All these things are useful.
Yeah, for sure. Like, because even when I remember when I first got into it, that Dogecoin millionaire or whatever, the guy that made took all of his life savings or something, wasn't it like something like 300,000, or he put in a shit ton of money, and right before it mooned, and then he became a millionaire off of a huge investment. But there were some other people on YouTube and stuff that actually like debunked him. They're like, look at all of his other trades that he's done, and he was losing money like crazy.
Yeah,
because he got lucky.
Yeah, but so that's the other part of this industry. Like, a lot of people get rich lucky. Or get lucky rich. I don't know how you want to say it, but and then they say they're kind of the oracle of all things crypto related, and they become the ultimate like shiller. And in reality, like, not a lot of people become millionaires doing this. Like, only the people that are smart enough make millions doing this, right? That's kind of where this ends up being. Because all the people that, and this is kind of the reality I've been facing, is like, this is always going to be a battle versus the ignorant versus the educated. Like, the ignorant will put their money in, and the educated will take it. Like, and that's not only in this industry, but it's in any finance industry, right? You're giving people your money, and if you don't know what you're doing, then they'll run away with it. That's why there's so many scams in here, because people are just so willing to give them money. So that's kind of my kind of little warning about DeFi in general. And it's an interesting one.
Yeah,
something
like I like
keeps me busy every day anyway. So
yeah, Keeps you out of trouble, eh?
Mm-hmm. For now.
Yeah, for now. yeah.
Um,
Question.
Sure.
How do you read the volume profiles at the bottom? Because they always confuse the hell out of me.
Oh, well, so these are not really volume profiles. These are just volume with like candlesticks. So these kind of basically, this is not that hard to read. So basically, this candle, for example, so we're on the weekly. So this week, which was the week of the 9th of May, I guess, yeah. This week had more volume than this week, but the price moved more in this week. So, but it took less volume, and volume basically means just the amount of money transacted to kind of get to that price. The activity, like, let's put it like that, because it's like those things are interesting. And I kind of heard Johnny say something about the hybrid system. So you guys are following Tino as well. If you look at, like, so I have a version of his. Let me just remove all this. I kind of use a version of his candles. So these candles, as you can see, mine are grayed out, and then you have the red, the blues, and then you have the greens and the purples somewhere. There, purples, pinks. So, and these kind of, what these candles do is they look at the past few candles and see if there's an increase in volume or not. So that's like an additional way of doing it, because here you don't see it. You don't really see that there's not very clear what this volume candle is. But you look at this one, you're like, oh my god, there was a lot of volume compared to these candles that kind of made this green candlestick, because otherwise it would have been grayed out. So there's kind of ways to have these scripts do that for you, which is very useful. And so the way I'm using this, like from this side, I could see, okay, so this is a very high intensity candle. There's a lot of volume used here, but then the sell-off was not as powerful. So that just went more gradually. And then if you look at, I'm going to lower the time frame a bit. Just a bit about volume, basically. So this is on the hourly. You can start seeing that we reach the top and you see a blue candle. And what that means when you're like going from up to a blue candle means that the volume actually is rising compared to everything before, but we're slowing down. And so depending on what you think that means, it to me is a sign that we're going to kind of end up reversing out of this range down again, because this was basically stopping volume. And stopping volume, depending on if you follow the hybrid system, and Tino, he will explain that this is the market maker at work. So the moment you start like buying and people are like excited, you get more buys, a market maker will have to sell to you. But then if he's selling, he doesn't want to have the price go up again because he's selling to you. So if the price goes up, he's losing money. So they put in so much volume that it basically stops the buyers, and they can reverse it to make money off the sells or the shorts that they've gone on you because you bought these sells of them. And then the market maker will push the price down, and they'll make money of the price going down because you started buying at the top. So that's one way to kind of also look at this, because the market maker has definitely an influence on these charts. They will always give you money to kind of like the moment you press a buy button, you instantly get your money, or you instantly get your assets. So if you were buying Bitcoin, you instantly get it. So there's someone selling to you. And I'm pretty sure that that's not a person. Like that'll be a market maker or a liquidity provider. So knowing kind of those kind of things in volume are useful, right? But in the same sense, you see it happening also. The volume spiked up here, and then they stop it, and the volume drops. And then you see here volume rising, and that's interesting because the volume is rising. This candle was the highest candle, but they stopped it, so they're wicking it down. So you see that the market maker is pushing this down, and then you see what's happening. So my bet now is that we've hit this EMA, which is what the algorithms use for market makers, and we're going to go down. In short,
So
it
could be safe to say that whenever the volume candles are like crazy high or whatever, there's going to be some kind of reversal.
Not really. So what you can the only kind of useful use for this kind of volume profile is that you kind of are looking for, and then it depends on the time frame you're looking at it, but you can kind of see that they ramp, right? So this goes from high and it starts ramping lower, and then you start seeing it rise again, and then you get these peaks, right? So if you were paying attention before this candle happened, you saw volume kind of rise, like buying volume rise. And that would mean that it's a very likely chance that we're going to move up because there's just volume going up. In its green candles, they're pushing the price up. So you'll probably see a candle go up after that. And then afterwards, like the candles after this will probably just be going down. Let's see, do we see that over here? Yes, so here you have the same situation, like we came from somewhere down and we see this going down, and then volume starts going up, and then you get these candles. And then it kind of settles down again. And then you get the sell candle. It's this is very hard to read. It's only kind of useful to kind of see a pattern in it. If you really want to go into, maybe I can boot that up. I can probably load that. You want to get into kind of really like volume based things, then I would try and use like say a volume profile. So I'm going to load this up. So volume profiles are, it'll have to load up for a bit. So this is Bookmap. This is an order book kind of software, and it takes a while to kind of populate. But as you can see, after it does, there's a bunch of liquidity over here. So that's interesting. Might go and get it. So what you see here on the right is the kind of volume profile, the session range volume profile. What you can see here is much more interesting because you see volume related to price. So in certain price ranges, volume will spike. So you see that in this between 31.90 and 31.320, there's a lot of volume. So a lot of traders are active in that range. That means that if you go past it, it's more likely that you're going to just shoot up because you're in that, you bypass that volume range. People are not trading as much afterwards. So then price will probably shoot up. But it's harder to break through these kind of bumps. So that's an historic profile of activity during price, which is much more useful than the little candlesticks below the trading view chart. And I think you can get a volume profile thing for, let's see, VP, session volume profile. No, I can't do it on this one. That's not it, I think. There is one that you can get the same thing on TradingView. So you see that you're on the side based on price, but those work slightly different. I don't really use the volume candles below here. They're not that useful. Just for seeing if volume is rising or falling.
What was that hybrid one again?
The hybrid one?
Yeah.
You mean the vector candles? The colored candles?
Yeah.
So you can get that off the. So I've kind of made my own. So it's my own code. It's including my EMAs, but you can get it. I think on. I'd have to look it up. Hybrid system. I think this is it. I will kind of, wait, this is it. Traders Reality. Yeah, that's it. You can get it off of here.
There's so many indicators and stuff on TradingView. I spent hours browsing tons of them. That's
Right.
I was like, no, it's next to impossible to just pick one. And that's probably why there's a million of them.
Well, so like they do different things. So it's an interesting thing to kind of consider. Like figure out what an indicator does, and if it helps you do what you want to do. Like some people don't trade, some people just like do spots. So it's kind of, you have to kind of realize what an indicator is good for. But yeah, so like I posted, it's a trader's reality. Like it's Tino's doing a fantastic kind of stream on trading. He has a different mentality from Elliott Wave, but it completely lines up. He also believes in the kind of waves of 3 and 5. So you kind of see that, but his mentality is completely based around the market making algorithms, which is very interesting to kind of also take into consideration. So any other questions? I think I see we have a bit more crowd as well.
Oh, really?
Yeah, nice. So yeah, any more questions regarding any of this?
No, I got so much more reading to do now.
Well, yes, let me know if you need any help. Like I'm always going to be around for any of these questions, but
Oh, for sure.
the no mic is working thing. Type it out. Let's see. This can go. All this mess back up. Oh god, my stuff looks like a spider web.
Okay, so I hate to ask you to do this, but will you talk about the moving averages, like the 10, the 50, 100, and 200?
Right. Well, I covered him like briefly. I think you were kind of away then, but I'll repeat. So a moving average basically just says that. So if I go on a weekly, so the 50 moving average. Figure this stuff out. The 50 moving average, which in this case is this one on the weekly, basically says it takes 50 of these candles. So one, and this is one, and then all the way down to 50 down the line, and it calculates the average price, and you can actually set that up to be like what it determines it by, if it's like by the top of the wick or by the closing price. Usually it's the closing price you want to do. So it basically just sums everything up and divides it by 50, and then that's the value you see at that candle. So it's just an average price over time, and the 200 one is 200 candles, and so that will be a slower moving average. So it takes more kind of movement to move a more data average. You just need more data to kind of also move it. So those are kind of slower moving ones in a way. So if we go to the daily, where we can actually see the 200 and the 800. So in this case, the 200 EMA is here, and the 50 EMA is here, and I also have like the smaller ones who I'm using here. And then we still have this very kind of, the 800 EMA is still below the daily at this point in time. So that's kind of where we're at now, and we did break it, but we're now hovering above it again. It's a good chance we might kind of go down from it. So that's it. It's basically average or average price at that specific point in time. So every time the moving average updates or the price updates, you get another piece of this line. So that's the average price over this kind of past 50 periods. So it's basically the average price of this move. And then that kind of keeps on going. So you kind of use that to determine, historically people use it to kind of get resistance and support indications. Because if you, depending on what you believe, a lot of traders might use that, so that will influence the price, or the algorithms use that to kind of determine where price needs to move. So it's all these things that could be at play in this sense. But yeah, you basically, the higher time frames are just slower, and the lower time frames are faster, so they react faster, and so you kind of use that as indications. The easiest way to use it, by the way, is to just look at them crossing over, although that on the higher time frames that is delayed by whatever time frame you're on times the EMA you're using or the MA you're using. But the best way to use it is to look at the crossover. So right now we had a daily crossover here from the yellow line to the red line, and a crossover means like it's going to go in another direction basically. So if we now have the yellow and the red cross over the 50, like that'll be really bullish, of course, but like the price have to move to 33K first or above it. So it's a good indication that it's always going to be a little bit laggy, EMAs or MAs. EMAs are quite, the difference between those two is that EMAs are slightly more accurate on the lower time frames and on kind of the recent data. So it's kind of, how do you say that? It emphasizes recent data over older data. So that's why this is usually what I use for kind of looking at the now. And if I wanted to like look at something very long term, so if I want to do the full history of Bitcoin, I want to look at the averages over that time, I would probably get the normal moving average or the simple moving averages, because those are just more kind of more accurate moving average over the actual historical moments. If that makes sense. I'm getting tired here. I can sense that. Any other questions? We have Abby who switched on. Will it work, Abby?
Well, I appreciate you doing this. You're really good at teaching. We should have recorded it.
I feel like I went a million miles an hour though, so like I'm not sure if that's helpful, but we'll see. It's good practice for me though, so thank you.
Well, thanks for teaching us something for sure. And now that's another AMA with the ones in Nodeify guy and Nodeify. How do you pronounce that anyway?
It's I think a quick sub next to melt your brain some more, I guess, and mine. So I can't hear you, Abby. No. I saw your mic pop up, Abby, but it didn't make any sound. So. No.
Can you hear me now? Hello.
Yeah. Hi.
Yeah. Oh, hi. Oh, it worked.
Good job.
Okay, so just a general question, like when you go in with your trading strategies and identifying trends, you have a ton of different algorithms and different ones you look at. Are there certain ones that you go over and check like back and forth through different algorithms and different, indicators, like specific ones that you look at before you like go in and make a trade?
Well, so kind of the first thing I learned learning any of TA was like the guy who taught me said like, don't bother trading to trade. Trade when you have some kind of semblance of certainty. So find the highest odds things. So I'm likely to take, if I was not doing this kind of call right now, I was likely to trade this, right? It pops, like we've known the 800 EMA is like this long barrier between kind of price moving up. So it hitting that, to me, it like, this is like the moment it hits here, I'm like, okay, I'm gonna short. So like if I wasn't actually doing this call, this is probably the short point I would have tried to hit. I could have probably set a buy here, just a limit buy. Didn't do that, I was too preoccupied. But these are kind of high odds moments for me where I'm like, yes, this makes sense. If it fills, if it starts like mooning to like 100K from here, I'm good with it. I'll set a stop loss up here and like I'll just buy in like up here then. But in this case, like knowing these kind of EMAs are super easy way of doing it, right? This is such a high odds moment where if it doesn't look strong, and going over what we've kind of gone over with like the strength index, this was not moving up at all, right? While price was crawling up, this was actually weaker. So there was no indication that this was going to go up here. So now looking at this would have been a great trade, I think. Like this little move already is kind of a good trade. And then what I'm expecting to happen right now is there's two options. So I can go and crash all the way down, like just straight up down. Maybe I should grab an arrow. Not that arrow, never mind. Is there an arrow thing? Anyway, you know what I mean? Oh, there is actually. Arrow. That is a shitty arrow. Okay. Anyway, we could go all the way down, or it could do something like this, because we see that there's another very important EMA. There's a reason my 50 EMA has this color, right? It has the extra band there. What it could do, theoretically, is now kind of hit this and stop there. And that would mean that would very likely would go up afterwards. So knowing that that's another high odds moment, I can go and watch, wait till price goes there. If it doesn't move beyond it, if it doesn't like shoot through, or it like doesn't show any kind of strength going through it, I might go up to long here and ride all the way up to kind of my forecast, which was kind of around 32, 33K at the moment. So that's kind of how I use these tools on a very basic level. Like the simplest way of me doing it is that. And obviously I'm using a lot more kind of things and indicators. Like I'm using the book map to look at actual like order flow. I'm using Elliott Wave to kind of confirm that that's actually a realistic kind of movement it's going to make. So I can definitely use all these kind of different techniques and different indicators to kind of go about and looking at if a trade is worth my time. So it's never a blind trade for me. It's never a hopium trade for me. It's always going to be based on the things that are presented to me. And again, like this trade would have been a good trade already. Like I would have just gone here and I've seen a dip, and then there's a choice for me. Okay, well, so it dipped below, but then recovered above the red one. Well, I might have just like sold here. I just take my profit and I'll just wait to see what happens. And if it goes here and it holds, I'll probably long it and then just sit right the wave back up. So those are the kind of things that go on in my mind when I'm trading. But a lot of kind of the active trading, if I'm just like scalping, I'd rather use like things like Bookmap to actually see a live volume deltas, volume profiles, know where we are, and see kind of the orders come in live. So that's kind of a different tool to use other than like reading charts. So there's several ways to go about it. Again, like if you want to use Ichimoku, that's another way of kind of going about it. Again, the price, the rules I explained, like the price moved above the cloud, the blue line moved above the red, and the lagging span is above price as well. So this would be a very bullish time in general, but you would probably already hit that around here, because this was already above the red. Yeah, so you would have hit that here. You would have been able to ride that up, probably then take some profit, and then it comes back down. But we're still bullish on this. Like the moment this kind of information breaks, like it goes back beyond below, like there could be a bullish moment here. So I'm actually thinking we might hit this 50 EMA and just keep on going for at least a bit. But yeah, again, it is speculative. All of this is speculative. It's also subjective. It's the way I'm reading this. Like Atma probably has a different way of looking at it. So that's yeah. I hope that kind of explains it.
Oh, yeah. Well, there's probably a million more questions, and as soon as we're done this, we'll be thinking of them all. But I think you've talked for almost 2 hours now.
Yeah, like good amount of time.
Yeah, that's awesome. Thank you very much for your time. We'll wrap it up though, so you can get some rest and
cool,
and relax a little bit. So,
thanks everyone. Yeah, thanks everyone for joining. Like a lot of fun. I'll be around if you have any questions as well. So
Yeah, thank you very much.
Thank you.
It does help hearing it come from how your brain works when you are doing trades and whatnot.
right. Well, I have to say, like, I'm currently not active trading because I'm too busy with other things. But again, like active trading, it's so time consuming. That's the last thing I'll say about it. Like, it's like if you're actually actively trading and you're not doing like the big like swing only day trades where you wake up, have a cup of coffee, look at the chart and say, okay, I'm going long, or like at the end of the day, you're like, oh, I'm going short. Like if you're doing it, like they're sitting there looking at a chart, it's a job. It'll consume your life. So that's the requirement for doing it well, because you cannot walk away from active trading. Like you're always going to be watching these charts. So it's a choice if you want to do it. Like I currently, obviously, my priorities lie with kind of making sure Nodeify kind of succeeds and everything. So trading is not my highest priority at the moment, but it is, yeah, it is a fun way to kind of go about it. If you're good at it, you're going to make a lot of money. Takes time though, so you'll lose a lot more money than you make when you start out doing this. That's the only thing I'm going to say.
Oh, for sure.
Yeah, I think that probably you have all been on a streak of losing trades as well already. So,
Ouch.
so have I at some point. Like when I started trading, like I was losing. Like I had like a full week of just like not hitting a proper trade, and then the next week I kind of made it all back, and then was a lot of lessons learned, right?
Well, exactly. It's like there's a lot of things, especially if you want to be self-taught kind of thing too, right?
Mm-hmm. Right.
But only a couple bucks here and there. Try it out. Mess around.
Right. Yeah, you don't put your house down for the first trade you do. That's definitely not a wise decision.
Oh,
And don't take out a loan for either, because I saw you post that. Like literally, only trade with completely disposable income. That's my recommendation on all of this.
100%. Because not gonna follow my wife's advice.
Yeah, because if you're gonna get a loan, and you're starting out, it's about the same as getting a loan and putting it all in red in the casino. So it's like there's odds, but probably not the odds you like at that point.
Not financial advice though. Not financial advice.
No, exactly.
You want to do that? Power to you. Okay, well, let's wrap it up, and we'll have a part 2 and down the road.
Cool. Yeah, if you guys want a part 2, I'm not sure about what I should cover then, but we can have a talk about that.
Maybe once everyone's kind of started to dive into it a little bit more, they'll have a little bit more questions on the more in-depth information.
Right. Yeah, this was purely basics. This is the fundamentals you should know, and then the rest is like added knowledge.
So 2 hours of basics. Okay, people, you hear that? Yeah, 2 hours. So can you just imagine how long the other one's gonna go for? All right then.
All right. Thanks for having me, and talk to you all soon.
All right. Talk to you later.
Bye.